We're going to take a look at why investment bankers like JP Morgan are lying to you about Bitcoin. What are their motives and what are they really getting ready for? We're going to zoom out and we're going to take a look at what I think is the bigger picture. Okay, we've got an article out of beingcrypto.com. JP Morgan still dabbling in crypto, but is the bank serious about adoption? All the confusion out there, if we could only make heads or tails of it. A weird relationship with crypto. First, some background. As some of you already know, JP Morgan CEO Jamie Dimon is famous for being anti-crypto, and he's been vocal in his opposition since crypto went mainstream in 2017. Yet, given the banking industry's history of betting against their own investors, that's a key right there, it isn't hard to believe that Dimon has been secretly stacking sats all along. It's kind of funny because that's a joke I used to always make, right? Because obviously these guys know better, you know? So to me, I think while they're sitting there telling all their investors to stay away from all of this, they're sitting there in another room going, buy everything you can now. I want to know everything now. Anyways, that's that's my hope, right? Anyways, continuing on. JP Morgan, the bank, has been a bit more balanced, especially during the current crypto cycle. It all began in February 2020 when JPM was reportedly considering merging its blockchain arm with Ethereum builder Consensus. We're going to come back to that in a bit. The bank has had conflicting views. For example, in May 2020, it recommended that its clients stay away from crypto. Shortly afterward, it announced that it would be providing banking services for Coinbase and Gemini. So tell your individual customers to stay away, but then make sure that you're going to be offering the back-end services for when people are ready. This is surprising given that JPM has also allegedly unbanked many crypto entities. For context, it reportedly closed the bank account of a crypto mining company in August 2021 and infamously closed the bank account of Uniswap founder Hayden Adams with no explanation. There has since been speculation that the order to close Hayden's account came from the US government. I wouldn't be surprised. In February 2021, JP Morgan said it did not expect companies to add BTC to their balance sheets like Tesla famously did just 2 days later. Later, JPM's co-president Daniel Pinto admitted that the bank will get into Bitcoin at some point. Now, if that wasn't hypocritical enough, JP Morgan also said that BTC is no longer a hedge due to its increased correlation with the stock market. Anyways, we're going to continue on. 1 week later, JP Morgan sent a letter to clients recommending they allocate 1% of their portfolios to BTC as a hedge. JP Morgan was also frequently comparing BTC to gold. 1 month, its analysts would say that investors preferred BTC to gold, and another month, they would say that investors preferred gold to BTC. Never mind that BTC being lumped in with gold technically makes it a hedge asset. Now, for what it's worth, JP Morgan apparently still believes BTC will hit 150K in the long term, a prediction that assumes BTC will compete with gold. Remember something, the investment banks, they just want to make sure that they are the rails that you use, okay? They are the gatekeepers. They want to make sure they stay the gatekeepers. So the investment bank narrative, at least the fiat investment bank narrative is, Bitcoin is dangerous. All of this is dangerous, and you need us to navigate this. They don't want you navigating it until they're there and ready. They want to make sure that all the little fleecing stations are ready, right? So they can catch you on every corner and every fee. Anyways, finishing up this article, and then we're gonna dive into some other pieces of this because they're telling you not to go in, but where is JP Morgan in the shitcoin game, right? Where are they? Anyways, Dimon, who has acknowledged that BTC could yet reach 10 times the current price, still says he will not invest in it. Not invest. He also called cryptocurrencies decentral Ponzi schemes. I think they meant to say decentralized Ponzi schemes, but there is no head, right? And forget about cryptocurrencies. Like, let's just put everything aside. There's shitcoins and there's Bitcoin, okay? All the shitcoins are affinity scams. Those are literally just pretending. These are projects pretending to do something that they don't really do in order to get you to buy their tokens. Anyways, despite the mega banks' bipolar opinion of crypto, the fact of the matter is that they've been investing in the industry and adopting it. That's right. Consider that it led an investment in ConsenSys in April 2021, entered the metaverse earlier this year, and made its first DeFi trade on Polygon just last month. Then, on December 13th, JP Morgan published what appears to be its most comprehensive crypto report to date. It's entitled The Dynamics and Demographics of the U.S. Household Crypto Asset Use. The report begins with a short introduction that gives an overview of crypto adoption in the United States. Now, before we take a look at that report very quickly, and of course, I'm going to provide all of this in the show notes. If you guys want to dig through, you're more than welcome to. But there's something very important here. The investment in ConsenSys. Let's go take a look at that for a second, right? Because keep in mind, JP Morgan has been adamantly against any kind of adoption, but they're working with ConsenSys, and also ConsenSys provided a white paper frame outline for a CBDC to the government. So all these people are just kind of circle jerking around. All right, here we go. A group of 35 shareholders of Ethereum giant ConsenSys have filed for a special audit of a 2020 deal that saw JP Morgan Chase acquire an influential stake in two of its flagship products. This was in exchange for 10% stake in the new entity and a $39 million loan by ConsenSys chief and Ethereum billionaire Joseph Lubin. According to a press release issued Wednesday, the deal, known within CAG as Project North Star, resulted in financial institutions JP Morgan winning a significant slice in the company's lucrative intellectual property, specifically MetaMask and Infura. And this was March 3rd, 2022. Now, so you can see, obviously, they don't think it's not that they don't think it's shit, right? They just want to make sure that they are going to be there to profit as best they can from people getting fleeced in shitcoins. So while the bank themselves is most likely going to acquire Bitcoin for themselves, they're going to position themselves in the businesses that sell you shitcoins and that quote unquote help the shitcoin ecosystem. Let's continue on here. Let's take a look. This is out of this report. The Dynamics, Demographics, U.S. Household Crypto Assets, Cryptocurrency Use. And take a look at this very interesting chart here, okay? This is incredibly interesting. Involvement in crypto exchanges versus brokerage accounts by race and income between 2017 and 2022. Okay, I don't give a shit about the race. I don't give a shit about the income. What's important to me, what's extremely important to me is this constantly going up, okay? And you gotta read this. It's crypto exchanges versus brokerage accounts. Okay. So what does this tell you? This tells you that less and less people are opting in to the traditional stocks and equities and all that good stuff. And they're actually taking a look at, they're looking at Bitcoin, and unfortunately they're looking at shitcoins. So JP Morgan needs to make sure that they are on it. Now, I also have this report, which is very interesting. This is a report that also came out of JP Morgan. It's called Payments Are Eating the World. 75 million, and again, right, it's such blockchain wallet users globally. 75 million blockchain wallet global, anyways. 23x growth since 2015. And take a look at this, the number of blockchain wallet users worldwide. Okay. So you understand what JP Morgan sees as the opportunity, right? They see people buying shitcoins as the opportunity. That's exactly what they see. And so they are positioning themselves. The mixed messaging from the financial institutions is specifically not to help you. It is specifically meant to confuse you and keep you confused until they're ready. And when they're ready, then you can come to the circus and you can spend your money. Anyways, don't be fooled by the shitcoin circus. Focus on Bitcoin. The investment banks are just a bunch of noise. They're looking out for themselves.